All right, guys. So if you've been keeping up with the channel, you'll see the crab pattern that we've been trailing. You'll see the screenshots from the Euro USD pair, the hourly 4 chart in particular, where we noticed a couple of pattern setups happening, and we finally got our pattern completion. So what I did was I just went ahead and dived into the Trading View app, just to go a little bit deeper into what I found, how I found it, how you can start identifying those patterns as well. So, and it's still enough time for you to actually execute a trade, okay? Because those targets just got hit, that crab pattern just completed. So, I mean, it's still time for you to check it out. And even if it is too late, then you can still learn something, learn how to find certain pattern setups, so that way you can become a profitable trader. So, like I said, go ahead and head over there, y'all, and let me know what you think.
All right, so what is going on out there, everybody? In this one, we pretty much finna break down everything I've been covering. If y'all been following me on Instagram, I've been posting the pair, the euro dollar. So if you've been keeping up, you'll notice that I've been looking and spotting for a crab entry opportunity. Okay, and pretty much I'm gonna show you guys what I found here on the 4-hour chart. So if we take a Fibonacci tool, it's been a while since I used TradingView. All right, so bear with me here as I remember where all of the tools are. Um, Basically, if we bring a Fibonacci tool from swing low here to swing high here, we can pretty much see, guys. I'm gonna bring this over just a little bit more, but you guys can pretty much see, and I'm gonna mark it for you guys so it's a lot easier to kind of see where I'm coming from. But we pulled the charts from this swing low here to this swing high here. I might have to inverse these numbers because it's really hard to see on this side right here. But if you guys can pay attention, you'll see the 23, 236, 382, 51, the 618, 786. It's really hard to see. So give me a second, guys. Let me see if I can go ahead and just kind of inverse this pretty much where the levels are. Here we go right here. So we'll put these to the center. This is in the middle. All right, so let's see what we can do with this here. Okay, yeah, so that's not gonna work. This is pretty tacky. So so I'm gonna just go ahead and put it back, guys. Right on the left side there. I think that's really stupid. Why can't I put it on the right side? Whatever. This is gonna have to work for now, guys. Also, there's a few levels that I have to fill in, but guys, I know you guys are probably still getting familiar with how to use Fibonacci. Um, Again, like I said, I want to use these patterns just to give you guys a better understanding of what I'm looking at here. So it may be easier if I go ahead and remove this first. We're gonna go ahead and grab this ABCD pattern tool right here. This is our X leg. This is where the move begins. Goes to A, goes down to B, goes to C, and completes here at D. Okay, this is the crab pattern. All right, so why is this the crab pattern? If we take a Fibonacci tool and we bring it from X up here to A, we just bring that across right here. So as long as this top level A is right at the tip here of this candlestick, you guys are accurately measuring the move. But if we follow to where the market retraces, we follow these candles down here. We follow these candles down here to B, where the market eventually led us. B actually pulls into the 51 zone, the 51% zone, and the 61.8 zone. Okay, so this is a really good zone right here because it begins to validate the crab pattern. Okay, so if we check our reference chart here, I want you guys to look at this crab pattern, and also I'm gonna create a PDF version of this this harmonic sequence layout just so you guys can download it and just have it in your notes. It's been so useful to me. I really can't trade without it, to be honest. So this is something you guys are definitely gonna want to keep, on standby, where you can just kind of reference to it really quick. But the crab pattern says that the AB retracement should be anywhere between 382 and 61.8. And when I refer back to what we're looking at here, the AB retracement, it pulls back into our 51% zone. So it's definitely in between 382 and 61.8. That's all we want to validate, okay? So that makes the A to B pullback valid. Now, according to the crab sequence, what should follow an AB pullback is a BC pullback anywhere between 382 and 886. Now, I want y'all to try to keep up with me because this can get very confusing. So I'm going to do this again. I'm going to delete this fib tool here, and we're going to do it again because I want you guys to really see what I'm looking at here, okay? So we got A and B. We're not no longer looking at that, okay? Let me move this thing off my screen here. I'm not sure. See, with the trading view charts, this is really why I'm disgusted with it, because I don't like all of the pop-ups on the screen when I'm just simply trying to do my thing and teach. But it is what it is. Anyway, guys, okay, take a look at this AB pullback here. That gave us our first move, but now we want to measure this BC retracement, okay? All right, so a retracement is a pullback. So if our move started here at X and went up here to A, that's the first leg of the move. This is the first pullback, okay? So go start from X, go to A, and gives us our first pullback, aka retracement. All right, that move is valid. So now we go to the next retracement. If this was X here and this was A, then this C part would be the pullback, aka retracement. So that's what we want to measure. So when you want to do that, the second move, instead of drawing your Fibonacci tool from X to A, it's simple. You simply just draw it from A over to B. All right, so when you're measuring a move like this, I want you guys to take a look at where this C candle is placed, okay? This C candle actually pierces that 786 retracement line, okay? The 786 has been completed, all right? So let's go ahead and check back to our harmonic reference sheet. And with the crab pattern, we know that our AB retracement is valid. We know that the BC retracement is now valid. Now what we look for is a CD retracement of 1618. And if you guys take a look here, I'm going to delete this fib tool one more time just so you guys get a better understanding of how this is done. Okay, so remember the first move, we moved the fib tool from X to A. Second move, we moved the fib tool from A to B. Most people might be thinking, okay, well, to get this retracement here, just do it from B to C. Always remember, guys, the third move of any Fibonacci sequence is going to be measuring X to A one more time, okay? So what you do is you bring the Fibonacci tool from X back to A. Make sure that lines up. And if you guys look down here, this measures the overall move. If you guys look down here, it extended here near our 1618, and it's probably still scheduled to hit that retracement number. Now, this doesn't necessarily guarantee you're going to get a reversal at this D point, but what it starts to do is give you clues, okay, of what could potentially happen next. So what you would want to do if you were speculating in the market around this time, watching this move set up the whole time, and that's what I like about TradingView, because you can go back as if the move never happened. Let's say we caught the move here, but we knew eventually we were going to be looking for a 1618 pullback. Well, what we would do is simply look left at the market, okay? Check this out right here, guys. I want you guys to check out this. This is kind of like a support and resistance level here, because you can see the market just get stalled out here. And I guarantee you oh man, I got to move this again. Yeah, I see this thing is not going to work. But anyway, so if we pull this move up here, shrink the charts, this zone right here seems to be a support and resistance zone, okay? The market can't really pick a direction. It's really consolidating. But then here, the market broke above that so-called support and resistance level with these candles here. All right. So I'm still not convinced. So what I would do normally is just go back and continue backtracking. And this has been a consistent zone right here, a consistent consolidation zone, where we see our current price level at, which is at our D point here. Okay. So let's go ahead and move back. Like I said, we can obviously see some strong support and resistance at this level because it's not a lot of movement here. Market seems to be really indecisive. So again, like I said, if you was to catch the move here, you would anticipate that at that 1618 mark, you'll be likely getting a market pullback or AKA retracement. Okay. And so far, it's been respecting it, guys. It's been clearly respecting it. So obviously, what you would do, let me see if I can find some shapes here. I really want to dumb this thing down, okay? Really want to dumb this thing down. Let's see. All right, guys, so I'm going to just draw a simple trend line here and just pretty much tell you how you would go about trying to approach this. All right, so let me give this a little bit more depth here. Let's see here. Make that a lot thicker. All right, guys, so let's say here that this green line would pretty much be where we're going to enter the market. So you will put you a buy limit down here where this green line is. Okay, this is where your buy limit order would go as you anticipate the market pulling down into this price level, right? And just to be on the safe side, what you would do, you would also put you would put your stop loss maybe somewhere here. Okay, let me grab that. So your stop loss would go roughly here. And just so we're not confused, I'm going to change the color of this red to represent our stop loss. Okay, so this is where our stop will go. This is where our buy limit order would go. And next, we would try to figure out where we would look to be taking profit, okay? All right, so typically what I look to do and what's been successful for me is when I set my take profits for at least the 382, okay? Now, that's just my risk tolerance and that's just what I choose to do, okay? But that's not what you guys have to completely follow and abide by, okay? So, like I said, the maximum amount of profit is typically going to be taken here at this 382 level. So this is where the fibs become a little bit more important to pay attention to. Okay. So this is our 382 level. Let me change the color back green so we're not confused. Okay. This is where we're going to take our profits. So as you guys can see, if you measure what we're risking in our account relative to what we're going after, it's a big difference, okay? Okay, because from this entry point to this stop loss, it's not very far. But if you guys measure from this entry point to this take profit, that's a lot of space. That's a lot of pips. Okay. So you could be a lot more conservative, guys. You don't have to necessarily go for this much pips. Okay. Typically, a 1-to-1 ratio is acceptable. So when I say 1-to-1 ratio, it's basically it's even to what you're risking in your account. Okay. What you're going for is even to what your account is risking. So this would be roughly a 1-1 ratio, a 1-to-1 ratio, you know, somewhere up in this range here. So this is right above our, our 127 extension. Okay. So if you want to take a more conservative approach, you could take profits here, guys. But the whole point of this is to help you better decide where you should be entering the market. When I first started out, I had no clue what to do. Like I had no clue where I should have been getting in and I would just see that the market is trending up and just start buying. I would see it trending down and start selling. That was not a good approach. I lost a lot of money with that. But once I got introduced to ratios, Fibonacci, it made everything make so much more sense. Okay. So guys, like I said, this is just the crab pattern. There's many more patterns out there, but I do want to just teach you guys the best way and the best approach to, looking for moves to measure and the best way to go about setting up a potential entry opportunity. Okay, so we're going to break this thing all the way back down. I'm going to clear this entire chart for you guys. And we're going to do it one more time just for anybody who might have missed it. I'm going to give deeper context going around again. Okay, we can get rid of these trend lines for now. Appreciate it. And if anybody knows how I can get this pop-up to stop bothering me, guys, I would truly appreciate that. Because obviously I'll be able to, deliver better videos for you guys without as many distractions. But it is what it is for now. I guess we'll have to deal with it. But again, guys, this is all I did here. This is it. I simply measured from this swing low up here to this swing high, as you can see here. All I'm doing is spreading it out so it covers the entire move. Okay. From here to here, our very first retracement pulls down in between 51% and 61.8. Okay. So if we go back to the reference chart, our first pullback should be between 382 and 61.8, which it clearly is because it pulled down into the 50% mark. So it clearly passed the 382. All right. Next, what you want to look for, so it's not so confusing, is you will measure the next move, which is going to be from this swing high to this swing low. Okay. Right up in here, but I'm just pulling it over just so we can cover the entire move. Okay. Based off our chart, the next move should fall anywhere between 382 and 886. When we see this point here and where it pulled into, it's certainly past 382. It's past 50%. It's past 618. It pulled into the 786. 786 most certainly falls in between 382 and 886. Okay. So it's really simple. Again, I don't know why I'd always delete these when I'm redrawing it. It's just easier just to understand in my mind. But again, for that final leg, we're looking for 1618. All we simply do is measure from swing low to swing high again. Okay. And I don't know why it seems a lot more accurate this time. But okay, guys, look. So as you guys can already see, the market has already penetrated the 1618. Now, another thing you can do just to give yourself more, confirmation that this move is potentially a good move to, make a trade with. You can look for what's called Fibonacci Confluence. All right. So Fibonacci Confluence is pretty much when you, so I'll show you guys. You just grab another Fibonacci chart, and instead of measuring swing low to swing high, X to A, we're going to go ahead and do the CD leg, which we decided not to do the first time. Okay. So this is X, this is A, this is B, this is C, and this is D. So, excuse me, guys, we're going to measure this BC leg because you remember the first move measures X to A. The next move measures A to B, but this time we're going to measure from B over here to C. And we look for confluence, okay? So if you guys look carefully here, let me move this one more time. It's almost over, guys. You bear with me, okay? So if we move this here, I don't want you guys to pay too much attention to this clusterfuck of numbers here. Pay attention here to where you see 1618 and 2618. Okay, because that's also a Fibonacci extension zone. So when you see these two zones are lining up here, this just gives you further confluence that this is a real support and resistance level, which is quite obvious because when you look to left, you can see this level has been tested in the past, guys. This price level has been tested. If you know what support and resistance levels, check it. Look at here. The market was balancing on this level, near this particular level here. This is a very significant support and resistance zone. Okay. But again, guys, you can't predict what's going to happen in the market. You can just make your best judgment based off what Fibonacci is suggesting. Okay. So again, what you would do, you would look to go ahead and enter a buy here. I prefer buy limit orders. So I will put a buy limit order here. And obviously guys, that's assuming the fact that you caught this move in time. Okay. That's assuming that you caught the move in enough time to where you can set up a buy opportunity. Okay. So if you look here, let's say if you caught the move there, well, you still got time to set up your buy limit orders. Only do limit orders. That's just my style. That's just how I play the game of trading. I only do limit orders. Again, you would be conservative. You would set your stop loss just outside of the take profit here. Probably might even give yourself a little bit more breathing room. But this is a conservative approach. Okay, turn the color of this red. And then we will put a take profit anywhere between our 100 mark, which is here, and the 382. So let's say if we was just being super conservative, we just decide to go here. Well, this is still deeper than the 1-to-1 risk reward ratio, guys. Okay, so you're going for a lot more profit than you're actually risking in your own account. Okay, and that should always be the case. Okay, there should always be more on the line to win than there is to lose. You know, so I hope this video was helpful, guys. I hope I was able to pretty much break down what to look for when you're setting up your Fibonacci tools. Obviously, we're going to get into a lot more videos. I just need you guys to stay tuned. Tell me what you want to see. Like the video if you found it helpful. Share it and subscribe to stay updated on all of the latest content. Again, like I said, I'm going to go ahead and break down this harmonic sequence codes into a PDF that you guys can download. And we're going to keep this thing rolling, guys. 2019 going to be a big year for us traders. We're going to slow down. We're going to pace ourselves, and we're going to figure this thing out. I hope this one was helpful. I'll see y'all on the next one.